Hello traders, Cory Mitchell here with TradeThatSwing.com. We're going to look at some of the trades I liked, some of the trades I also could have been in, and then I didn't trade too late this morning. I was done about an hour in, but there were some opportunities that occurred after that. Things I want to eventually get to incorporate that I'm not quite doing yet. I feel I'm getting close to having the patience and the endurance to hold some of these trades, but we'll get to those in a second. Right now, some pretty classic type trades. We had a drop, a pullback, a drop back to the low, a pullback that didn't really go anywhere, and there's a bit of a distinction here. So I'll sometimes talk about whipsaw candles and how I don't like them, but kind of like anything in trading, all whipsaws are not the same. So in this case, it whipped up, came back down. We try to go up, can't get to that prior high point, and we start turning over. So we haven't cleared the day low yet, so I like that actually, where this low point is still there. So, maybe people who had bought long, they might have some stop losses there. And then now we popped up off this point. So if some people bought in here, they might have stop losses just below there, which means that if it gets back to those, it's likely to trigger those stop losses, which helps push it down, right? We're approaching orders where people potentially bought. If you'd bought anywhere in the day, this is the obvious stop loss point below those lows. So as soon as we start getting close, there's people who see the writing on the wall and start selling. A lot of people think it's a conspiracy that your stop losses get hit. No, it's just kind of human nature. Although I'm not saying, hey, once you know where they are, you can definitely stop hunt them. But once this starts dropping again and it gets close to this, you get some people coming in. So I was trading this with an aggressive stop loss to begin with, meaning I got short, but there is that possibility that maybe there is, it's going to probably trigger some stop losses, but we don't know how much selling is going to come in after that, because there was, a bit of support here. The price had bounced off it initially, bounced a little bit off it here, but pretty weak bounces. Even this one, came right back to it. So I was pretty short biased. I believe I can't remember what I said, but I think on this one I had said could kind of go either way, and I might have been a little more biased to the short side just based on the longer term chart for the day. Not thinking big trend, but just where it could go today. And VWAP, again, I've mentioned in prior videos, I'm not super concerned with it, but I'm finding it a little helpful, so I'm keeping it on there for now until I decide, yes, it's really helpful, or no, it's not, and I'll get rid of it. And my target was down here, which was basically the prior daily open or something like that. There was a support level. It was like an open from a few days back. And so I thought, okay, maybe it'll get down there. And it got pretty close. And again, a big whipsaw. I held through that one. And then it popped, and I'm like, okay. And I was aggressively trailing it, so I had a stop loss down to here. And it tried to go again, right? It tried to drop, and then it popped up below this prior low, and that's where I got out. It held down in that area for quite a while, but ultimately it was near the target, and I don't view targets as, if I'm looking at kind of a bigger support area or resistance area, it's not like the precise penny. I view it as an area. If it gets rejected off that area, then I want to be out. So that was a good trade. Also, big volume spikes. That's something new I've been incorporating in. if there's a big volume spike, I have to get out at least some anyway, because that's obviously a big move or there's a fight going on. So get at least some out anyway. The fact that it was close to my target, just get all of it out. This is the start of something that I want to get better at holding. But in this case, I knew my trading day was pretty much limited to 10:30 because I had something else going on. And so I wanted to be in this one to see if it moved. And if it did, great. If it didn't, target was up here near the day high. So nice reward to risk, but it fizzled. So it was an aggressive trailing stop loss. You can see my entry point. Where was I had a comment on here. I just wanted it to, oh yeah, super sluggish pullback after strong move up. Feel good buying it here for a few cent risk with a possible move back to the highs. Aggressive trail to that clears this area. So basically, it started clearing out of this, which I felt good, and we'll talk about why I took it here as opposed to maybe earlier. But I knew maybe it could stall up here. Like it was still kind of stuck in this choppy area even once it starts to pop. And so it had the aggressive trail on it. So I got a little bit out of it, but was really hoping for the pop up. Didn't get back in, and I was kind of asking myself, why not? So had some wins so far in the day. This one over here, which we'll get to. And so was a little maybe hesitant to give it back. I'd also had one little loss in there. So that might have played into it, and I kind of was just maybe a little too dismissive, which I tend to get. If I don't really want to trade, I'll find a reason not to take something. So that's something I kind of have to work on, as opposed to being more push your chips into the middle. So that's, yeah, something I got to work on, because it wouldn't have been huge, but I would have grabbed another half R there, because it's the same scenario where we're still kind of holding this area. It's now a double pump, but we haven't cleared out of this area. So it'd still be, even if it got above these highs, we still haven't really cleared that area. So would have been stopped out right there for a little bit. Either way, this one, pretty classic TC drop, clean pullback, and starts dropping again. This one, again, there was a support level, pretty much the bottom of the range on the daily. Like a few days ago, there was a low at $2.52, and that's where I took my profit. I was trying to see if it went, but it kind of stalled here, and so I just got out. If it would have kept dropping below 250, I was kind of watching that level, because then you're getting the breakout on the daily chart to the downside, but it didn't happen at that point. This one, you can see the target, like we're kind of moving in this bit of a descending channel. This, I believe this is set to 2R, if I recall, or like 2.1 or something, which probably would have been a bit aggressive. More likely, if this had continued down, taking it more near this 0.5R, just because that had kind of been the channel that had been moving down in, just moving a little bit below the prior low, maybe like 10 cents. So, maybe $14.10. That would be probably under 2 to 1, but still within the tendency of the day. But it didn't drop. And the prior ones had, right? It pulled back and then dropped swiftly. Pulled back, and I wanted this pattern to continue. Drop, pull back, drop swiftly. Drop, pull back, drop swiftly. And it didn't. So it was not in alignment with my expectation. I took this knowing, hey, maybe not the most phenomenal reward to risk. I want it to drop quickly. If it doesn't, I'm going to get out. And yeah, so it started to drop and then started pulling back. So got out of that one. Anything else to talk about in here? Yeah, the domino. So we'll talk a little bit about this. Kind of wish I would have been in this one and this one too. Nice sharp drop, pull back, but basically I believe I was taking this right at the same time, or they occurred right around the same time. I was watching this one, was ready to go on it, but that one was also a nice one. RCAT, nice domino, and could have maybe been in this. It doesn't quite look like a normal pattern, but we had talked about the stop losses. So the day low is down here. Big whipsaw candle on the open, moves up, drops, moves up, drops, moves up. And you can see all these levels now become like, anyone who's trading, you know, there's now stop losses above there, there. There's stop losses below here, here, here. So it's like, which one's going to get triggered? And you get a domino where you can see this little pop up, which fails to go anywhere, and then you start dropping, and we're just getting so close back to this level now, which then is only a few cents from this level, which is only a few cents from this level, which is all those sell orders start triggering, and then people start shorting, and you take out the day low. So this one, you know, I wasn't really paying super attention, and then I saw the drop, and I was like, yeah, nice domino trade. Could have considered that. So I'm going to drop this, and we will just look at a clean version of the charts. And a couple things. So this was the one I was in right there. Remember, I was looking for the pop higher. But you can see like we've had a nice move up, and you know, the price hasn't really moved up, but it hasn't really dropped. It hasn't eaten into this big rally. So these are the types of ones that I would like to eventually get to the point of being able to say, hey, you know what? The price action looks pretty good for a long here. The most recent move, strong move, was up. We have not had any really big moves down. This is basically like a big extended version of a double pump, or in this case, a triple pump, which when we start to stretch a little later into the day, and this isn't super late, this is, you know, before lunch, but that crazy volatility from the morning subsides, and you start to get these slightly elongated patterns. So instead of a double pump, it might be a triple pump. And if we get in on the double pump, that's fine. You know, in that case, you're getting in here. And yeah, but then we have to hold through, and which is the part I'm trying to get myself comfortable with, that I have to hold this for an hour for the big move. But we're trying to get in once this sort of range establishes itself. The best entry, I've talked about this with tons of patterns, if you get a little false breakout in a direction you're expecting, meaning it's confirming the direction you want to go. So you have, you know, these lows kind of established, and it drops right back to the low, but it can't make any headway below, and then you start turning up. Here's like a beautiful entry point. You're waiting for, so you can trade it two ways. You can trade it with the aggressive trailing stop loss, right? Because you still don't know if it's going to clear this area. It might just be choppy for the rest of the day. We have no idea. So this is how I'm thinking I'm going to trade them. This type of pattern is, you know, fairly aggressive to the top of the pattern. So, you know, I'm trailing it as it goes up. Near the breakout point, still trailing it aggressive. Once it pops through, then, you know, that's when other targets and stuff come into play, or a little more relaxed trailing stop loss. Doesn't need to be every single candle, or it could be. Just trying to catch a high momentum move. And like here's another huge one. So we had this range. Again, you know, if you get something out of this, that's great. But these videos are really for myself to keep things in mind that I need to remember. I also I used to keep a golf journal where I like wrote down what I was working on, what was really working. And I switched to video because I'm like, it takes so many words to try to explain a tiny thing, when in video I can go back and I can look at exactly what I was talking about. I can explain it much easier than writing. So this type of pattern, basically. This type of pattern. It's like big move up. At no point does it really get eaten into. It's like this is just accumulation for the next move up. Accumulation for the next move down. This one, you know, hasn't really, it's stalling. So if you got short here and you're trading aggressively, you'd still get out down here. That's a nice big 60-cent range. You probably capture a portion of that. You know, that's still a good trade. It's a big pattern. You have room to the bottom. Here we don't have a ton of room to the top. But you could still, even that's probably not a bad risk reward trade getting in here. Like you're probably looking at 1-to-1 with the chance of making 3, 4, 5R if you get a runner. So it's not always about can you get 2-to-1 or like having to trade 2-to-1. It's about the probability that you're probably going to make at least 1-to-1 or 2-to-1, but there's maybe a 30% chance you're going to make 5R if it breaks out. So that's, you know, something to consider too. If trading near some of these levels, like if we do happen to be in a breakout, that's why I'm aggressively trailing it, because if it runs, then I don't have a target just sitting at that high. I can trail it, and then if it does break out, you can have a target up here, or you know, wherever you think there might be an important level, probably the day high, which is what I had picked originally. So you're getting in down here once you see this pattern, getting out up here. Maybe end-to-end game is that you accumulate, you buy some here, and you get a little bit out here at the day high, and then on the rest of it, you wait to see how the price action unfolds. We have the exact same pattern again, so you start accumulating more shares in here for the next pop. So you're maximizing that gain. Yeah. Or you can trade it, you know, each pop at a time. So I'm trying to be nimble and be able to go both ways, because there are days when I'm very aggressive and I want to trade just the quick moves that I traded today. But I also want to be able to hold for a bigger move if I can. And that's something I haven't super mastered with day trading. I can do it with swing trading because it's not as focused. You know, I'm just checking my chart every once in a while. When I'm sitting here looking at the price action, I find it more difficult to just hold through all this and then hold through all this to eventually get out way up here. But you can see how that could potentially add to the P&L. Domino effect. There was just, you know, I'll mention that quick. These were, you know, kind of some patterns I like. 1, 2, 3, kind of triple, quadruple type pump. But again, big move up, not really cut into. We're not making headway to the downside. Start accumulating near that range low. This domino effect. So I'm not saying you buy immediately, but dropping, you know, there's going to be some stop losses accumulating above these swing highs. You get a pop out, which is a shift. Also, if this was a little bit lower, it would have been a perfect rounded bottom. These lows are pretty flat. That one's a little lower. So we have a rounded bottom anyway, plus you have a domino effect going on. So we broke above this high, we held above it. Not that that really matters in this case because these are not significant highs, but you are going to have some order accumulation there. And so we break above this one, create the rounded bottom, pull back. Now this is an opportunity to get long, this is an opportunity to get long, and you can just see the domino effect of as the price takes out these swing highs. Some other, kind of dominoes going on here when this fails to go and turns higher. Oh yeah, that was one other thing. And this is more for other people. I'm aware of this, but trading, I don't think people understand how much of a real-time endeavor it is. They think about predicting where price will go, but it's extremely dynamic in that if the price gets pushed a little bit higher than it did, it would have snapped this way. But instead it actually got pushed just a tiny bit lower, caused a cascade of orders, and it dropped. And that dynamic, so like a pattern can go from, so here we have a drop, a pullback, and a drop which doesn't go anywhere, another drop which doesn't go anywhere, and then a big spike to the upside. So the idea is like people are starting to realize they're screwed. If you're going short here thinking there's more of a drop, patterns that don't develop are just as powerful as patterns that do. Because if everyone's expecting a drop, and we don't have a ton of volume in this area, but it's still enough to spark a move in the opposite direction if all of a sudden all these people who are going short can't get a move lower. Like they're waiting on it, and all of a sudden the price starts creeping up. And now all of a sudden they're hitting their exit button, getting out of there. So anyway, that's just a couple things to be aware of, that just because I had mentioned the domino effect earlier, and if you can get an idea of where some orders will be clustered, then you have a potential advantage. But domino effect was not the point of this video. Was looking at these bigger moves, just noticing, hey, like if you have a big move and then it's not really cut into and you get this bit of a range developing, maybe look at adding near the lows of the range basically in anticipation of a move back toward the high and a possible breakout to the upside, which would give you the big, huge risk reward. So it's not about just that, this might only be a 1-to-1 reward to risk. You risk whatever, $500 to make $500. The fact that you could risk $500 to make $2,000 if it does break out, that's important. So thinking of risk reward a bit in terms of probabilities, it could very likely be this, but there's also a possibility it could be this. How do I capitalize on that? But yeah, I really like that. So yeah, those are my thoughts for myself and potentially for you if they help you.